Yo, what up everyone? This may be honestly one of my best videos on the channel. I'm going to talk about finding your edge, building consistency, and how to become profitable in trading by building upon what I'm going to go over in this video. There's some really key points in here that could transform your trading and open the door to other things that you may have never even thought of. Let's try to get this video to 531 likes. I would really appreciate that. And before we get into it, I'm going to link my Instagram in the description below. If you haven't already, I recommend following it at Ameritrade. I do daily trading recaps on here, along with very good trading tips and tricks that you're really not going to find anywhere else. The link is in the description below. It's a very good resource, and you're missing out if you're not following it. But now let's get right into the video. So what we're going to build upon is our trading edge. And this is a concept that I feel like not a lot of traders understand or have heard of. And in my opinion, every single trader needs to have an edge in order to become successful. Now, what an edge is and how I view it is it's a trading system, it's a style, it's a plan, it's a personality feature that gives you an advantage over your competition. Trading is a zero-sum game. When there's a winner, someone else is losing. So you need to have an advantage over the competition. Maybe you know something that someone else doesn't know. Maybe you do something on the opposition from your competition, and that's going to give you your edge. Now, your edge brings confidence in your trading because your edge brings consistency. You know what makes you money, and you know what to avoid and what not to do. My edge, I'm confident in my trading. I wake up, I go to my computers, and I'm confident with the market because I trade based off of my edge. My edge tells me how to trade, and because I trade whatever that style, that system, that plan is, I know it's going to make me money in the long run. You're going to have losers, but obviously in the long run, it's going to make you money and it's going to make you consistent because you also know what to avoid and what not to do. Now, every single trader has their own edge, and it's based on their own personality, their own experiences, their own emotions. You could have a trader that's been in the market for 10 years versus someone that just started last month. They're going to have different experience. Their eyes are going to be trained differently. I look at the human brain as like a muscle. The more you work it out, the longer you sit in front of the screens, watch the market develop, learn new things, the stronger and more muscular it's going to be. Someone that's been trading 10 years is obviously going to have stronger mental capital versus someone that has been trading for, let's just say, last month. So everyone is going to be different. They all have different emotions, and that stems off of their personality. I look at edges like a fingerprint. Mine's going to be different than yours. They all generally look the same, right? If I show you my fingerprint, it's going to, from a distance, it's going to look the same as yours. And, you know, your friends, your families, they're generally the same because it's a fingerprint. But if you go into detail, no one could ever have the same fingerprint because it makes us unique. The same thing in the market. Our edges are unique. Everyone is going to have a different edge because it fits them differently as a human and as a trader. Now, think of the market like a jigsaw puzzle, and the edge is putting all the pieces together to form the bigger picture. The market is a non-stop journey where we have to adapt as traders, learn new things, adapt to the current conditions. What worked last month might still work this month, but we have to branch out and adapt a little differently to put the pieces together to form the bigger picture after maybe something last month changed. Now, keep this jigsaw puzzle analogy in mind because sometimes the picture of the puzzle doesn't look clear because you're missing a few pieces. Like I said earlier, conditions change, sentiment changes, volatility changes, price changes. So the market is never a set in stone picture that we look at it one day, it's going to be the same as it was yesterday. It's always different, and we have to put the pieces together in order to come up with a valid trade and in order to have a solid structure for our edge. Now, some things in the jigsaw puzzle might look clear, until you find out you have the wrong piece, which doesn't fit anymore. Sometimes you realize there are more pieces which you didn't even know existed. And then sometimes you realize that you need to remove pieces which don't fit and add pieces that do fit. So I want you to think of the market just like this puzzle: conditions, context, price, volume, emotions, personality, all the different pieces you have to add up together. And as a trader, for you to be successful, you have to fit the pieces together, and that's when your edge comes into place. Now, the same applies to the market. You have to remove pieces that hurt your trading, and you have to add pieces which fit and work out to put the puzzle together. I see a lot of traders that are trying to put the pieces together and think they're going to come up with the right answer, something that works 100% of the time, and they drive themselves crazy looking for that holy grail where they don't take losses, where it's going to be a guaranteed answer, when in fact those pieces they think that are working out for them are actually wrong, and they're hurting them more than they are benefiting them. You have to add pieces that benefit you, that fit, and work out to put the puzzle together. Now, this is just brief, but things you have to add: market context, different conditions, right? Market context, I stress this a lot. If you've seen my videos, Ameritrade course members understand this as well. I have a very large section in the course about this, but market context is extremely key because you have to gauge participation in the market. You have to know your competition. You have to know where buyers are buying, where are sellers selling, where is volume. Volume analysis is extremely, extremely key. Supply and demand price imbalances essentially is my edge, but they are very important because these give us high probability areas on the chart where the market can possibly turn. You can see this example right here, the S&P 500. I trade SPY options off of this chart. We rejected supply. This is an area where we look to play a bearish position. And then at demand is an area where we look to play a bullish position. I'm going to get more into this. But this essentially, my charts are completely naked besides price and volume. But this is things you have to focus on: organic price action. Learn more about yourself, your emotions, and what's key is you have to journal and review current conditions. One piece, let's just act like this yellow piece of the puzzle right here, is the current conditions. I'm constantly, in my jigsaw puzzle of the market, I'm constantly removing this piece and putting in new pieces to fit the current conditions. Volatility is different right now compared to where it was 2 months ago, if you watched my videos. So I'm constantly removing this piece, shaping it a little bit, bending a little bit, and then fitting it into my puzzle to adapt and coincide with my edge. And you could expedite this by journaling your trades. Now, things you have to remove. This is probably more important than what you have to add because you could set yourself back plenty of years in your journey. You could completely slow down your process if you try to add the wrong things. So based off my experience, the things that are the most important to remove are anything that brings noise. Noise is something that clouds your vision, it clouds your judgment, and it doesn't make you mindful with the market. This could be indicators. For me, like I just said, my charts are completely naked. The only indicators I use are price and volume and VWAP, but that is a price and volume indicator. It's all organic, naked price action because that is the only thing that could move the market. Indicators cannot physically move the market. What moves the market are physical orders and price and volume developing the current story of the market. So if indicators aren't working for you, you're trying to find something when this does this or this crosses that and X meets Y, we get Z. If it works for you, good, and you could build an edge off it. I'm not going to say anything about it. But in my opinion, indicators are noise. Emotions, you have to completely remove your emotions. Emotions are probably the number one thing that makes us take losses in trading. It's less about the market. It's more about our emotions. our perspective, our perception of different things that the market is telling us. I say this all the time, the market's the storyteller, and we have to comprehend the story the market's telling us. And our emotions usually are the only things that make us not comprehend the story. And also other people's opinions. A lot of people try to put trades on based off of what Johnny down the street is buying or what the guy they see on Twitter is talking about, right? Other people's opinions is noise. What I like doing, and this is an edge in itself, is figure out what the majority of traders do and just do the opposite. If 90% of retail traders fail, why do what 90% does? Do the opposite, and that's an edge in itself. In the market, there's also no right or wrong. People always ask me, did I do this right? Did I do this wrong? Everyone reads the story differently. For me, my edge works for me. It fits me, and I have a lot of success trading with naked price action, supply and demand imbalances, and market context puts the pieces together. And for me, my edge also requires me to come up with a plan because my plan gives me somewhat of structure. Now, I post my plans every day in the Discord, the setups I'm watching, levels I'm also looking out for. Here's the setup yesterday on NQ. I trade QQQ options off of this chart. I said I'm not here to predict what's going to happen. I'm just going to use these imbalances to gauge the auction and see how the participants react at each zone. A lot of people try to predict. And in my opinion, being able to react is more important than being able to predict. So we had demand lower, we had supply above. I said if we could get above the 1515 supply zone, I may focus on longs. Otherwise, supply can reject and demand lower can be bounced. The first zone tested today and the reaction out of it will set the tone. So going into this QQQ chart, this is the NASDAQ/NQ future. In the first 20 minutes or so, we rejected supply. This is a valid area to play puts. We also come down into this demand zone. Volume starts picking up. We start seeing some heavy buying pressure. And this is an area that I actually played QQQ puts off of, targeting VWAP for a nice trade. Eventually, an hour after I sold, we made even a further move up into supply where we sold back off, tested this low, and bounced before going into the close. So there's many different ways to trade. The thing is finding clues intraday that fit you and your edge. But in my opinion, the core should be naked price action, supply demand, key levels, and trading without emotions. If you take a trading loss, people look at the loss as they're doing something wrong, or they take a win and they are doing something right. For me, the right thing to do is follow my plan and follow my edge. And the wrong thing to do is go against my plan or go against my edge and deviate away from it. That's how I know if it's a good trade or a bad trade. Now, the key thing that you're probably all wondering is how to find your edge. Notice how I said your. You find your edge from experience and you find your edge from journaling. Screen time and experience are the biggest things. And when you combine your journal, I want you to look at your journal like your Bible. Review trades that worked out for you. Review trades that didn't work out for you. Review charts that you could have taken, hypothetically speaking. Where could you have entered? Did you see a similarity with a chart you saw today versus something you saw last month? Review, use it like your Bible, and subconsciously this experience is going to catch up. Now, while you're learning and building your edge, you have to apply tight risk management in order to survive while losing as much as possible until things start to click. Day after day, trade after trade. Your job right now when you're learning beginner stages is to lose as much as possible. I want you all to lose because when you lose, you have to make sure or that kind of sounded wrong. I don't want you to lose as much as possible, but I want you to lose as little as possible because your greatest lessons will come from the trades that you lose on, so you know what to remove and you know what to avoid once you collect all of this data and experience in your journal. Things will slowly start to click, but you can't have one trade completely wipe you out of this game. That's what I see. I see a lot of traders blow up because they take one Amazon contract and their account blows up when they trade without an edge. So you need to lose as little as possible and you learn the most from those losses. Your wins are just bonus points because you're making money while learning while, together. And another thing is you could read all the books, you could take courses, because those can be used as a core that helps speed up the learning curve to finding your edge. I wish I had somebody like myself when I first started trading, because it'll help speed up the learning curve when finding your edge. It's like walking into a dark room. If you have books, you have courses, that's going to be like the light in the room, where it's going to be so much easier to find what you're looking for. And when you have this edge, you have consistency, and there's really no better feeling than going into the market confident, knowing that if you take a win, it's going to be off your edge and you're going to make a shit ton of money doing it. Or if you take a loss, you're totally cool with it, because you know your next trade or the trade after that is going to make you money. And a lot of traders, I see this all of the time, they lack consistency, they lack profitability because they lack an edge. They go into the market blind. They don't know what they're doing. They lack their edge. You need to trade, observe, listen to yourself, review the market, journal your trades, and wait till the market slowly becomes clear and easy to read. That's when you know you're going to have an edge. And really, there's no better feeling in the market, because this is a skill and a job that you could compound a ton of money in no time limit and with all the freedom in the world that you want. It's really a very good feeling. I think I'm going to end it on that note. If you learned something, you enjoyed it, hit the thumbs up button, subscribe to the channel, and if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will also come with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.